How we doing, guys? So today I wanted to talk about how to properly journal and track your trading so that you can constantly work on improving and see the results that you want. So a lot of traders talk about journaling and they may even journal on their own time, but they're not really doing it the proper way in my opinion. Just journaling the trades they take, saying, "Oh, I should have entered here," etc. I'm going to show you guys a little bit of a different perspective today in how to journal and how I used to journal and how I still personally journal, and what really helped me to improve my trading in terms of performance. So as you guys know, trading is a performance job, right? Our job is to perform on a consistent basis. It's to execute our plan, and we do that on a consistent basis. We are going to make money consistently in the long term. Now, if we're just going into the market and guessing, we're gambling, we're breaking our system rules, we're not really like trading a plan, then you're probably going to lose in the long run. You may make some money, in the short term, sure, but as many of you have known and been through probably, you make some money and then you lose it all. That's when you're not trading a system and you're not following your plan. So I'm going to go through a little bit of a template I created so you guys can kind of learn and maybe use this template yourselves to kind of improve your own trading. And we're going to start off here with this little template here. So very basic, we have three columns here. Are you following your rules and your P&L on the day, whether you made or lost money? And did you stay or did you walk away? Now for this section here, the stay or walk away, for many traders, they're really good at performing for a certain amount of time. So, they get that 1 hour morning session in, they lock in their profits and they walk away. And that's their system. That's what works for them, right? And there's other traders who stay in the market all day and they'll watch the market all day. And if you can do that, that's perfectly fine. But for the most part, what I have noticed, including myself, most traders are not able to stay and sit on their hands all day watching the market. So the stay and walk is kind of basically saying like, hey, did you stay in the market all day? Were you over trading? Stuff like that. And the ideal goal here is for us to make our money, take it, and walk away, right? We don't want to be sitting at the screens all day. But again, like I said, if you can stay at the screens and you have your system is actually telling you, hey, there's another setup, then that's totally fine. Stay at the screens. But for the most part, you're not going to get 10 trades a day, 10 quality trades a day. Usually it's like one or two, maybe three if you're lucky on a good day. So generally speaking, within that first hour or that last hour of trading, those are the best times to trade. But again, this is all, subjective. So whatever works for you. So as you can see here, we have follow rules, yes, 4 times, and then we have no 4 times. So if we follow our rules and we win, so we make money on the day and we walk away, you want to give yourself 2 check marks. That's a double check mark. So those are the best days you're going to have right here. Now, I'm not talking about profit and loss in the day. I'm talking in terms of performance. So if you're following your rules, you're winning, you're making money, and you're walking away, you're guaranteeing, you're ensuring you are locking it in for the day, and you can, come back in tomorrow and make some more money or try to make some more money. So that is the best case scenario for most traders, follow the rules, win, and walk. So next one, follow the rules. Yes, we followed our rules. Did we win? We made money? Yes, but we stayed. We stayed in the market. So maybe we got a little bit greedy, or maybe our system told us, hey, there might be another setup here showing up. But the point is, if you're staying in the market, you still did good. You still followed your rules. So give yourself a check mark and you won. You made money by following your rules. But when you stay, you're kind of increasing the odds of giving profit back. So a lot of traders will make really good money in the mornings and then they'll stay, till the afternoon maybe, and they'll give maybe half of it back or maybe even all of it back. So it's not a really good habit to stay in the market all day, in my opinion, for the most part, for most traders. But again, do what works best for you. This is just my opinion. So next one, we followed our rules. We lost money and we walked away. So that's actually very good too. So we lost, we did what we were supposed to do. We followed our rules. We entered according to our plan, exited according to our plan, and the market just didn't want to pay us. So we ended up walking away. Now this is good because, you're limiting the chances of over trading or revenge trading here, right? So if you're following your rules and you're losing, there's always that, kind of desire to make the money back because you feel like you did everything that you should be doing and you should be getting paid for it, right? But as we know in the market, we can't decide when the market pays us. All we can do is follow our system. It's either going to pay us one day or it's going to make us lose money. And today it happened to lose, so we take a loss and we walk away. So this ensures that you stay in the game and you live to fight another day. Otherwise, if you stay, we'll find out what happens scrolling down here. So again, we followed our rules, we lost money, and this time we stayed. So still give yourself a check mark here because you did follow your rules. And generally speaking, if you're following your rules, you're also following your risk management parameters. So you're not going to be blowing your account on days like this, right? So you may have lost money and you stayed a bit and maybe you made some of it back, maybe you didn't. But the point is you were following your rules still, and that's the most important part. So now we move on to the not following the rules part. So this is where, you're pretty much going to give yourself an X for all these, but let's go through them. So we didn't follow our rules and we won. So we made money. Is that a good thing? No. If you're not following your rules and you made money, do not consider that as a win. This is going to make you lose over the long run. This is false encouragement right here. So breaking your rules and making money is the absolute worst thing you can do for your trading. So in this scenario, we walked away, we took our win, we knew we did something wrong, we didn't follow our plan, and we walked away. Still give yourself an X, right? Anytime you don't follow your rules, that's an automatic X. So next, we didn't follow our rules, we won, and we stayed. So a little bit risky here, right? So you're not following your rules, you made some money, but you also stayed in the market. So if you're staying in the market and not following your rules, the odds of you losing money are even greater, right? Than over here when we looked at this scenario up here. So it's one thing if you're following your rules and you're losing and you stay, at least you're following your risk management parameters, etc. Here, you're not even following you may not be following your risk parameters. You may be sizing too much. You may be trying to revenge trade. So very dangerous. So definitely give yourself an X if you do that. Next one is you lose money, you didn't follow your rules, and you lose and you walk away. So that's actually kind of good, but we're still going to give ourselves an X. So you walked away because you lost and you recognized you weren't following your rules, but still we're going to give ourselves an X there. And last but not least, you didn't follow your rules, you lost money, and you stayed. Okay, so this one right here, this is the worst case scenario, and this is where most traders blow their accounts, right here. So how many of you guys have been through this, right? You're not following your rules, you're taking maybe several losses on the day, or maybe you just take one bad loss and you blow a chunk of your account. So this can be from either, not respecting your stop loss, you're sized way too big, very, very simple. I mean, the most common reason people blow their accounts is their sizing, right? That's one of the most important rules to stick to is proper sizing. And most traders just get too, emotional and then they, revenge trade and blow their accounts, right? So what's happening here on this day is you're not following your rules, you're losing money, and you're staying in attempts to make it back. So this is basically revenge trading. You're trying to make back not just your losses, you're trying to make up for the mistakes that you didn't follow your rules. So you're also kind of beating yourself up over the day and saying, oh, I got to make up for this. I can't let myself, end the day like this. Fuck that. I'm not ending the day red. You might even be cursing and, very upset, very emotional, right? Now, these are the days that you really want to avoid. And, these are going to make or break your career. In this case, they're going to break it. So how do we avoid this? So let's get back to that. We'll move on to the next little section here. So now we're going to talk about execution. So you're going to basically want to rate or scale yourself in terms of execution each day. And I just used an A, B, C kind of grading scale. So looking at the A scale, so this is basically the bread and butter. This is where you want to be at most of the time. This is where most traders should be striving for every single day. So basically, I followed my system perfectly on the day, entered according to my rules. I exited according to my rules. I risked capital. I am 100% comfortable with losing on each trade, right? This is the ideal scenario each and every single day. If you're doing this, whether you're making or losing money, you're likely going to make money in the long term, assuming you have a good system or a decent system. Now, the next one is B. So this is kind of in the middle. So I followed my system with some discretionary trading. So kind of gambling a little bit. I chased entries, exited too early or too late, did not clearly predetermine my risk or my targets, and I sized a bit bigger or smaller than I should be. So this one is kind of a mix between the A and the C. So you're kind of following your system, but not 100%. You're throwing in some discretionary trading, and maybe you're a little bit emotional. You missed a move or something and you're trying to chase it. So this is not like terrible, but you kind of want to try to strive for that A game every single day. But the B game is, again, you're not going to be like blowing your account on this kind of day. It's just that it's not perfect execution. You have some things to improve. And for the C game, this is where our traders blow accounts or just have so much fear they can't even put on trades. So C game is basically you're trading completely discretionary. Maybe you don't have a system, or maybe you just don't know what to look for in the market. So you're kind of just guessing randomly. You're chasing price action. You're sizing too big or too small, for that matter. You're impulse trading. No regard for risk management. And you lose control and let the emotions fully take over your decision-making process. So this one is basically, now that we've read this one, we can go back to this chart right here, and basically right here, this last one, this is what equates to the C game, right? So if we go back now, so C game is basically you're just losing all the control basically over your logical thinking mind, and you're making decisions that you know you shouldn't be making. Now, a lot of traders beat themselves up over this for being in their C game, but you have to realize most of you guys cannot control this. This C game is kind of a built habit in your mindset, and when it takes over, when you're emotionally compromised, you just feel you can't make good decisions. The best thing you can do, the only thing you can really do at this point, is disrupt it, and by disrupting it, you just get up and walk away. So as soon as you're realizing you're breaking all your rules, you're not trading your B game or your A game. I mean, generally, if you're in your B game, that's a sign that you should be kind of, alert and cautious that, hey, we might be slipping into our C game here if we're breaking some of our rules already. So C game, a lot of traders start the day off, in their C game, right? Because like we mentioned earlier, they simply don't have a system. They don't know what to look for in the market. And I think one of the most important things in trading, aside from psychology, is having, a precise system that tells you, hey, this is where I'm getting in, this is where I'm getting out. So, if, most traders, let's close these out. So let's just look at SPY, for example. So again, this doesn't matter what you trade. I don't care what you trade. This applies to any market, but we're just going to use SPY for an example. So let's just say I don't have a system. I want to trade the SPY. So I'm going to trade SPY options, and let's say I got in the morning here. I saw this red candle and I got short. So I just got short here because I see that, oh, the market opened, it fell here, it looks weak. I'm going to get short right here. So I get short, I hold, and I'm going to say, oh, I want to target yesterday's lows, this area. So what happens is it drops, finds some support, finds some buyers here, and then it reverses all the way up. So what was our system here? What was our reason for entering? Basically nothing, right? We're just guessing. We're seeing a red candle and we're reacting emotionally. We're saying, hey, I'm going to get in because I think it's going to go lower. So in trading, you have to reduce thinking and, kind of put logic at the front step. So logically speaking, is this a good short? If we don't know what's going to happen here, let's see if we can zoom in here. If we don't know what's going to happen next, if we just saw this red candle right here, what would we think? Just out of, like, what's your first thought? You would think, oh, this is probably going to be a short. It's looking pretty weak here, right? And then we scroll and you see right the next candle, the next 5-minute candle, it goes right back up. So this is why you cannot just take trades based off how you feel or what you think, because what you think doesn't matter. The market's going to react according to, what other traders are thinking, and, what you think does not impact the market at all. So that's just an example of, how traders can trade randomly. Now, a trader with a system, I'll just give you guys an example here. So we'll use, let's say we'll use some key levels here to plan an entry. So let's say in the morning we saw this action. I personally wouldn't want to be trading this. It's very choppy. So let's say we skip this action. So we have a set high of the day, right? We can mark out our high of the day right there. And we have a set low range right here. So we know that if this low range breaks, if they break it, we're probably going to head lower, and it'll probably be a decent short trade, and we'll probably head down to somewhere near the previous day's lows. But if they hold this and they push it up, they're probably going to try to break the high of the day. So here's just an example of a trade here. So let's use a scalp trade, for example. So they broke the high of the day here, and you can see they held it. They tried to break it back under here. You can tell by the wicks, but for the most part, they held over it in these 5-minute candles. So what we could do is we can get long here after we see that this confirmation, these wicks are holding. We can get long, let's say somewhere in this candle, and we can risk off this low. We'll just move this line. We can have our risk set to here. So let's say we get in somewhere over here, 381.30, let's just say, and we're risking 381. So we're risking 30 cents. So we get the breakout move here, and we know that there's a pre-market high level here. So we can mark that out, and we can target that. So we got in here, 381.30. We targeted this 382. Let's say we just targeted 382.50, just to make it simple. So we get out 382.50. That's $1.20 per share, risking 30 cents. Right there, that's like a 4-hour trade. You made 4 times your risk right there. So to me, that's a well planned out trade, regardless if it works or not. It worked out in this scenario, but the whole point is having a plan and having a system that tells you, hey, this trade is more likely to go in this direction than not. So that's all your system is there for, right? It's to tell you what direction the trade is likely to go in. And that's your job as a trader, is to guess the direction and the velocity. So how far it goes. So we can only guess where the price is likely to go. And in this case, it reacted perfectly to this zone, this pre-market high. And that was a great take profit area. So as you can see, many other longs were thinking the same thing. They were sellers up here. They were not buyers. You had probably some retail traders buying up here, but those are the traders with no plan, like we talked about earlier, right? Like we talked about, the trader here who's guessing, he's getting short here because it's going down. He has no other reason. He's just getting short because it's going down. Vice versa, there's traders that are getting long up here because it's going up, and they're thinking, hey, there's the pre-market high. They're going to break it. Right? They're not thinking logically. They're just emotionally trading. So that's enough about the system talk. So hopefully you guys can understand here, a big part of why traders struggle is, they don't really have a system. They don't really know what they're doing in the market. So first and foremost, bread and butter of your entire trading should be having a system, having a solid system where you're making money, at least 50-60% of the time. Right? The rest is all risk management. So I highly suggest you guys use this, just write it down in Excel or wherever, and also use the other one as the grading scale to kind of grade your execution each day. So hopefully that helps you guys. I really recommend you do this. It will help improve your trading, because when it comes down to trading, a lot of traders are tracking the results simply based off their profit and loss, right? All they care about is whether they made money or lost money. But as we've seen here, what's really important is, did you follow your rules? That's the number one, that is the goal of trading, following your system, following your rules. And if you don't have a system and you don't have a structured set of rules, then you'll never be able to find consistency, right? Your first step is to find a system that works for you. And whether you find that on your own through back testing, or there's plenty of free videos, free resources on YouTube, or you can sign up to a mentor. I don't think there's anything wrong with, particularly with signing up to someone, learning from someone who's more experienced. Just be mindful, there are a lot of scammers out there, so it is difficult to find one. But There are a handful of good mentors out there that they genuinely offer great education. So that's an option for you guys as well if you're struggling to find your edge in the market and find a system that works for you. Definitely look into that. So hopefully this helped you guys. Again, trading is all about process and developing the right habits. So with that grading scale and that journaling, kind of will help you get into the right mindset of not so much focused on the P&L aspect, because as we've seen, you can make money on bad days and you can lose money on good days, right? You can execute your plan perfectly and still lose money. Vice versa, you can make very bad decisions like chasing and trading with no plan and still make a bunch of money. But as we know, that only happens in the short term, and then you will end up losing that money in the long run unless you focus on the process over the profits. All right, guys, I'm going to leave you off with that, and I hope everyone has a happy holidays and enjoy the rest of the year, and we'll see you guys in 2023. All right, guys, cheers.